Hi there, and welcome to our sit down with Hardman Co's Head of Tax Advantage Research, Brian Moretta. We're here to talk about the review we've released on Seneca IHT Service. So, Brian, great to have you. How are you today?
Not too bad, thank you. How are you?
Good, all good. Right, let's get into it. So, what is the investment strategy for the product?
Well, the Seneca IHT Service is a secured lending product which invests in two companies that lend across commercial property, stock finance, and selected specialist lending markets. Every loan secured with the security based on the underlying asset, while the manager targets a 4% annual return. But the strategy provides capital preservation over high returns, accepting the lower spread between loan income and investor returns in exchange for some greater resilience. Diversification comes from hundreds of underlying loans, although two legacy lending strategies are currently in runoff.
Okay, thank you. So, tell us about the fund manager.
Well, Seneca has been managing tax advantage investments for more than a decade and combines its investment team with some specialist lending businesses across the wider group. So rather than building expertise centrally, commercial property, stock finance, and vehicle lending are managed by dedicated teams with experience in their respective markets. This structure gives investors access to specialist underwriting while maintaining some central oversight through Seneca's investment committee. Although the organization is relatively lean, it manages more than 120 million.
And what about qualification for business relief?
Well, the product has been structured specifically to qualify for business relief through its active lending. Legal advice was obtained when the service was launched, and lending activities remained consistent with that original opinion. The manager is aware of more than 20 investors who have died after meeting the 2-year qualifying period and has received confirmation from advisors that relief was successfully attained in a number of these cases, while being unaware of any unsuccessful claims.
All right, so tell me about how the product manages cash and liquidity for investors.
Liquidity for investors is managed through a combination of matched bargains, treasury shares, and funded through the natural repayment profile of the underlying loan book if necessary. The redemption notice period was reduced from 3 months to 1 month back in 2025, and requests have been met within that time frame. Short duration stock finance loans generate regular cash inflows, while the property loans refinance more periodically. The manager actively controls cash levels, recognizing excessive cash can reduce returns, and if held for prolonged periods could create business relief considerations too.
Okay. And just to finish off, so could we summarize the product's past performance?
Sure. Well, the strongest feature of the Seneca's service is its consistency. Since 2017, both the capital and income companies have each delivered their 4% annual target return, despite the changing interest rate and economic environments. The principal investment company, Seneca Secured Lending, has grown net assets to just under 40 million, while cash balances are reduced as capital has been continually redeployed. Although the business experienced a significant credit loss in 2017, subsequent lending has produced only modest losses, with recoveries and provisioning demonstrating resilience in the lending.
Brilliant. Okay. Thank you so much for your time, Brian. If you would like to know more about Seneca, then check out our recent report on our website. We've got the details listed below. Please don't forget to like and comment on the video wherever you're watching and join in the conversation in the comments. Otherwise, we'll see you back here next time. Thank you.